This one case really comes to mind. A lady passed away last October, and I did her final tax return earlier this year. And it sounds awful, but the later somebody dies in the year, the worse it is. This lady had Canada pension, and she had a pretty good OMERS pension that she was receiving. And what her kids didn't know was that she had money in RSPs. So the government deems you to have cashed in your RSPs on the day that you died. So she had a couple $100,000 in an RSP. So she had her Canada pension for 10 months out of the year, her OMERS pension, and then we had to tack on over $200,000 of RSP money. And that put this lady in the highest marginal tax bracket, which is 53.53%. So I had to tell these young kids in their 30s that, it's extremely unfortunate, but they had to write a check for over $100,000 to the Canada Revenue Agency for their mom's tax bill. They were crying, I was crying. I felt so bad because had this woman come to me a few years earlier when she had retired and had a strategy to get the money out of her RSPs, her kids probably wouldn't have had to pay so much tax. So it's so important to meet with a financial advisor and have a strategy. So yes, RSPs can be a good fit. However, the key is you have to make sure you get that money out of there, because if you unexpectedly pass away, your family's going to have a pretty big tax bill on that RSP.